Hi everyone, welcome to the YouTube channel. Bank of Montreal, as usual, with us, especially our mortgage specialist from there, Assad Naeem is our man. And we're going to talk about this week moving up to a bigger house. So you have a house already, but you would like a bigger house. And there's maybe there's some good deals to have on bigger houses at the moment, even though inventory is limited. The bigger houses, aren't moving quite as quick. So Assad's going to explain to us this week what the steps you've got to go through to move from your existing house with the mortgage that you've got to get in a bigger house. Hi, Assad.
Hey, well,
So
great topic.
would you explain that to us, to the viewer?
Yeah, definitely. Let's dive right into it. So, you already own a home, and now it's time for you to upsize. Your family is growing, and you want to move into a bigger house. How can you do so? If you already own a home, chances are you have some bit of equity already built up in that home. Now, the first thing you should do is check out how much equity you can actually take out. Reason why I bring that up is you would need to put a down payment onto that bigger house. Now, if you have the funds and you have the down payment readily available, then you may not need to take out equity from your current home in order to fund that down payment for the next purchase. But for a lot of us, we don't have that type of equity lined up. So, or we don't have those type of funds lined up. So we may use our equity that we've already built up in our current home. So talk to your mortgage specialist about that. And one of the ways to do it is taking out a homeowner line of credit, which is a line of credit which is secured by your current residence. Now, with that line of credit, you can withdraw the funds from there to put towards a down payment onto the next property. Once you can get that, the next step is trying to look at affordability for that next home as well. Now, remember, because you're moving up and the next home you're buying is to be a principal residence, well, at least that's what our primary goal is, you can still put a minimum down payment onto that next property as well. Meaning it doesn't have to be a 20% down payment. It could be that 5-10% down payment that you would normally put on your primary residence. So those rules still apply. Now, the next step is, do you want to sell your current residence when you move into the next home, or do you want to keep it and start building a real estate portfolio? If you want to sell it, yes, chances are you can sell it to move into that big next home. Now, you can sell it before or after, depending on how you want to carry that current home. If you want to sell it before, then you would have to have a firm sale agreement, and chances are you may also need an MLS listing for to show that that home is up for sale and conditions have been waived for that sale in order for you to qualify for the next home. If you want to sell it after, then you can carry on that home and possibly keep it in the future as a rental property. Now, if you want to do that, the Bank of Montreal allows you to do a 100% rental offset for that rental income that you will generate from that home if you plan to keep it. Now, how that works is we sent out a third party appraiser to do a market rent appraisal on that current home to see how much it can possibly rent for on a month to month basis. We would then take that rental figure and offset it with your principal interest payments, your property tax payments, and your heat payments. And if you're paying any condo fees, your condo fees as well as a variance charge. If there is a surplus from that offset, it gets added into your income. If there is a deficit from that surplus, it gets taken away from your income. But what it does is it effectively wipes out your current residence from your mortgage application, allowing you to better qualify for that new home. So those are some steps you can take a look at, but always make sure that A, you have your down payment ready. If you have the funds, that's great. If not, take a look at taking out some equity from your current residence. B, think about what you want to do with your current residence. Do you want to sell it or do you want to keep it? Do you want to sell it beforehand or do you want to sell it afterwards? And C, find out what you can actually qualify for if you want to buy that next bigger home. So those are some three crucial steps that you should take a look at. And don't forget, you can always reach out to us for more information and a
Yep.
detailed look at each individual scenario.
It's actually not a bad scenario at the moment as well, because if you've got a medium-sized home and you're trying to move up, you probably have a good chance in this market with the limited inventory of maybe medium type houses of selling it and maybe getting more than your list price for it, because you're going to sell that quicker than the big ones are going, because obviously they're more money and they're staying on the market just that bit longer, you know. So it's not a bad time, is it? I think it's quite a good time actually to do that trick, that scenario.
Yep, absolutely.
All right, and you'll sort them out with the mortgage and everything, give them advice, and hopefully I'll sort them out with the real estate, no problem. All right,
Yep,
Assad,
there you go.
I'll talk to you next week. Have a good week, buddy.
Take care.
See you. Thank you for watching our video. We hope you enjoyed it. Please subscribe to be notified of new ones.